Forex markets are getting faster. Traders are increasingly turning to smart forex bots to handle the speed and complexity of 24/7 currency trading. These automated systems are becoming a standard part of the trading toolkit as more traders struggle to keep up with the pace of market movements. The BIS Triennial Survey for April 2025 reported that daily forex volume hit $9.6 trillion, a 28% increase over 3 years. That kind of growth highlights the need for tools that can monitor and execute trades without human intervention. Smart forex bots are not just a trend, they're a response to a rapidly evolving market structure. These bots, known as expert advisors, are scripts written in MQL4 or MQL5 and run on platforms like MetaTrader. They automate the process of scanning for trade setups and executing orders. Traders are using them to monitor multiple currency pairs at once, often including major pairs like GBP/USD, and act on opportunities in seconds. This is especially valuable in a global market where London opens as Tokyo closes and New York starts trading hours later. Manual monitoring is simply not feasible in such a fast-paced environment. What's driving adoption is the combination of coded risk controls and backtesting capabilities. These tools allow traders to define strict entry and exit rules, manage leverage, and test strategies against historical data. The goal is to reduce emotional decision-making and increase consistency. However, there are risks. 1. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Of the biggest concerns is overfitting, when a bot performs well in backtesting, but fails in live markets due to overly optimized parameters. Traders are also wary of volatility risks and execution quality, even as transparency and automation improve. Despite these concerns, the shift toward automation is accelerating. Many retail traders find it increasingly difficult to justify manual trading, especially when markets move in seconds and opportunities are fleeting. The rise of smart forex bots reflects a broader trend in financial markets, the move toward algorithmic execution and data-driven decision-making. These systems are not foolproof, but they offer a structured way to handle the noise and speed of modern forex trading. The BIS data underscores the urgency. With forex volume surging, traders who don't adopt automation risk being left behind. The question is not whether smart forex bots are useful, it's how well they can adapt to changing market conditions. Execution speed, accuracy, and risk management remain key variables. Traders are still evaluating the trade-offs, but the direction is clear. Automation is becoming a necessity, not a luxury. One of the biggest challenges is ensuring that these bots perform reliably in real-world conditions. Many traders are using them on single pairs like GBP/USD, where volatility and liquidity are high. This allows for more focused strategies and better control over risk exposure. Still, the market is unpredictable, and even the best-coded bots can struggle during sudden shifts in sentiment or macroeconomic events. Transparency is improving, but it's not universal. Some traders report difficulties in understanding how certain bots make decisions, especially when they're using complex algorithms or machine learning models. This lack of clarity can be a barrier to adoption, even for experienced traders. The industry is moving toward more open-source and auditable systems, but that's still a work in progress. The next signal to watch is how regulatory bodies respond to the growing use of smart forex bots. As adoption increases, so does the need for oversight. Regulators may introduce new requirements for transparency, risk controls, or performance reporting. This could impact how these tools are developed and deployed, especially for retail traders who are still learning the ropes. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. In the meantime, traders are experimenting with different strategies and configurations. Some are using bots to handle day-to-day trading while they focus on larger picture analysis. Others are using them as part of a hybrid approach, combining automation with manual oversight. The key is finding a balance between speed and control, a challenge that will define the next phase of forex trading automation. The rise of smart forex bots is not just about technology, it's about adapting to a market that never sleeps. As forex volume continues to rise, the demand for efficient, reliable automation tools will only grow. The next signal to watch is whether execution quality and risk management can keep up with the pace of market evolution.